Let's take a look at this investment. This is the Vanguard S&P 500 Index ETF. The ticker symbol is VFV. The company that sells this is Vanguard. The S&P 500 is a basket of 500 businesses. Index just means it is a collection of or basket of. ETF stands for Exchange Traded Fund. VFV is the symbol that you would actually type in to buy this in a retirement account, such as your tax-free savings account or your RRSP. A bunch of identifiers at the top, but the most important one for you is the ticker symbol VFV, because that is how you type it in to purchase it. It's traded on the Toronto Stock Exchange and it's sold in Canadian currency. So it would be ideal for accounts that hold Canadian dollars, such as a tax-free savings account or an RRSP or an RESP. It holds $20 billion. It distributes quarterly. That means whatever dividends it throws off will be distributed every 3 months. I believe it's about 1.5%. It was created by Vanguard about 13 years ago in November 2012. Management fee of 0.08%. That means Vanguard charges that much to manage or operate the fund. A management expense ratio, or MER, of 0.09%. That's the management fee plus a 0.01%. That could be for administration, marketing, whatever. That could be advertising, marketing, whatever. So the total cost to the investor who buys this in their retirement accounts would be 0.09%, or 9 cents for every $100 invested. On the right-hand side is a description of what its objectives are and its returns over the last few years. Second page talks about its holdings. The fund itself has 504 stocks. The benchmark that it's comparing itself to has 503. Some valuation metrics, for example, price earnings ratio is 28 times. That means for every dollar of profit created by all these companies, people are now willing to pay over $28. Price to book ratio is 5 times, which is extremely high. For example, if a house is worth $100,000 on raw materials, it is trading at $500,000. So what is that extra $400,000 added on to the price of the home? Well, it's sentiment, excitement, and the current market. Return on equity over 24%, which is actually insane. A high number would be actually 15%. So at 24, that is extremely high. It is profit divided by equity. Earnings growth rate is almost 20%. That means all the businesses in this fund are pushing out growth at almost 20%. That means if you made $1 in profit this year, it's expected that next year it'll be $1.20. That's just insane. Dividend yield, as I mentioned before, is pretty low, 1.2%, because a lot of companies are growing so fast, as you can see from the numbers, that they're not pushing out the cash. They're keeping the cash to grow the business. Top 10 holdings, a lot of tech. You can see Apple, Nvidia, Microsoft, Amazon. It's all tech in the top holdings. And continuing on the second page, you can see that sector weighting, information technology, over 30% of holdings. Other sectors represented are financials at almost 14%, consumer discretionary almost at 11%, healthcare is about the same, and so on and so forth. And that's probably more than you wanted to know or even needed to know about VFV. Learn the lessons about money that your parents and teachers didn't know. Download my free newsletter linked off the bio. Good luck. Take care.